Okay, let me just do a quick mic test and off we go, okay? Okay, I think the mic sounds okay. Okay, final mic check, then we start already. Okay, here we go. Okay, welcome everyone, welcome. Thanks for dropping by. Okay, so sorry, I was a little bit late, like 9-10 minutes like that, because the Microsoft having some issue. I don't know for whatever God reason, okay, whatever it is. But thankfully managed to resolve. So we will be starting. So same thing, my stream is Monday to Thursday, 9 p.m. Time zone is GMT+8, okay? GMT+8. So usually we just stream for like 1 hour, short and succinct. I don't want to drag too long because everyone I know is busy, may not have time for this and that. So I try to keep my stream short, mainly on stocks finance. So I know some of you watch my TikTok shorts, YouTube shorts. Mostly I do shorts. Instagram also shorts, everywhere shorts, okay? So I try to stream to answer most people's question all at one go. Because every now and then people message me, ask me this, ask me that. Then I find it quite difficult to answer everyone's question. So it's best if you drop by this stream, you ask me, or once I consolidate all the questions, I just answer here. Then straight away I can answer your inquiries, and you also answer everyone's inquiry rather than one by one. Similarly, any point of time questions, just feel free to drop in the comments. Okay, I will make sure I try to read everyone so I can address them. If there's something I miss, just repeat. Okay, I want to assure you I'm here to answer your question. Okay, so today same thing, 3 components for each stream, over 3 components. First component, we always talk about the stock market in general, specific companies. Second component is the options part. Okay, because I always talk about options. I'm a full-time options trader, okay, doing the wheel strategy, in case some of you all don't know. Any questions about options can feel free to highlight also. Lastly, okay, the last component is always a more relaxed 5-10 minute chit chat session, that kind of, okay, just to make things easier. I mean, not to take things too hard, too serious, okay? So I'll share more about my plans, okay, at the last component. So 3 components, okay? So first up, let's go to our first component, okay? Today I want to talk about alphabet. Okay, alphabet, let's go. Okay, so start already, start. Okay. So I put my face at the top. Okay, so today I want to talk about alphabet is because I received quite a few questions messaging me, asking me, yo Pigeon bro, can we still buy alphabet? Okay, so just to recap quickly, alphabet just released earnings, I think last week, okay? So the stock went from like 360 drop to 330, sharp drop, because of a slightly weaker forward guidance, in the sense that they are spending too much on capex. Okay, they spend a lot of infrastructure. I think 200 billion or 205 billion, that's how much they spend on their capex upcoming. That's a lot of money. Plus, for the first time, I think first time since IPO Alphabet, okay, or you call it Google history, first time they were negative cash flow for that quarter, okay, because they spend so much on all these infrastructure, capex, all these things. Their cash flow was actually negative. Okay, so investor was spooked, they were very worried. So there was a huge sell down. I think it was down almost like 7 to 10%, I can't recall. But in short, it was about 360 and down to about 330. So quite a huge drop, right? But shortly, after these few days, in fact this week, Alphabet has climbed back up, okay? It has went back up to like I think 360, 370, or even 380. So yes, after this quick shock, right, like a sudden sell down, immediately it recovered back to like 370, 380 now. So it's even higher than before. So the biggest question is, can we still buy Alphabet? So what exactly happened? Okay, so in short, right, people probably start to realize all this spending were necessary to capture demands. Okay, they are not spending frivolously, or spending to enrich their management people like some typical company. Okay, especially in Singapore, some of the company, they pay their management way too much, okay, focusing on enriching their people. But Alphabet is not spending to do that. Okay, they are spending to meet their demand. They have a backlog of about $500 billion. Okay, 500 billions. So remember, Spending money to enrich themselves or for entertainment is different from spending money to capture all this demand. So remember, when it comes to this sort of tech space, especially this sort of alphabet, tech company, all these things that talk about all this cloud, AI, all these things, if you don't spend money to capture your audience right now, right, they are gone forever. So I give you an example. Let's say you are using a OneDrive, okay, Microsoft OneDrive. You have been using OneDrive since when it was free until now it start to charge and you continue to use. Remember, if you have been using OneDrive for like 5 years, let's say, example, Microsoft or Azure or whatever, you use for 3-5 years. Now suddenly you think that, oh, maybe it's a bit more expensive, I should start to convert. Will you really convert? Will you really move over even if another competitor is providing cheaper? No, because to convert to another system, even at the individual level, you have to shift all your files over, especially if you are an Apple user. A lot of problem, right, from Apple to those Windows or iOS kind of system. Not iOS, sorry, Android or Microsoft Windows system. From iOS to that, right, Apple to that, the file transfer always have a lot of issue. And that is only at the individual level. At the company corporate level, right, you have thousands of employees who are so used to Windows, OneDrive, Outlook, all these things. Suddenly you want to shift them, to example, to Apple iOS. It's not possible. It will cause a lot of downtime, learning curve, and that's translated to a loss of income, huge loss of income. So what Alphabet now is doing now is to faster capture the demand, get the people suckered into their system. If you don't capture right now, they go and use someone else's system, that's it, they are gone. They will be entrenched into that system. They will never ever come back to your system. So that's why Alphabet has to spend aggressively to capture all these demands, market share, before they flew to somewhere else and never come back. So this entire tech system, tech space or AI cloud, the whole idea is to get them entrenched, get them deeply rooted, use your system so much, so long, they can't leave. It's like Hotel California, like I said. You can check out anytime, but you can never leave. That's the whole idea. I want to bring them since 1969, like Wandering Spirits, okay, Hotel California. Entrap them, enclose them, keep them in your system, and they will keep using it and keep paying you. So I think people start to see past the idea of spending on all these capex. Investors start to see the long-term view that Alphabet core business remain very strong. They continue to produce products, make a lot of money, and all this spending is to capture future demands and share, plus to meet the current demand. Remember, backlog of $500 billion. Okay, not spending money for fun, for entertainment or party here and there, or go to Thailand, Bangkok, all this, is to capture demand. So that's a big difference. So firstly, we understand why the sudden peak, right, sudden rise in price probably is due to this. People start to realize it. So now the biggest question is, can we still buy Alphabet? No, it's going up. Okay, so Alphabet peak is 400. Okay, when I bought them aggressively, it was like 200 plus, 300 plus. I was saying actually Alphabet was actually undervalued. The crash was good. In fact, I was hoping Alphabet will crash a bit more so I can buy more. But well, it went back up. Now it's like 370, 380. So to buy or not, it depends on your perspective. Personally, if you think Alphabet will be worth like $1,000, $2,000 in the future, why would you care whether you buy Alphabet at 330, 340, 370, or even all-time high 400? If Alphabet is going to be $1,000 maybe 2 to 3 years later, nobody cares whether you bought it at 380, 370 or 400. Nobody cares. People only know that, oh, you 2x your money. Oh, you bought it at 300, 400, now become $1,000. Well done. So you have a long-term perspective and you believe Alphabet is going to worth that much. It doesn't really matter. 370, 380, 330 is still a good buy. But short-term, right, if you're looking at short-term, yes, there will be a lot of volatility. If you're a short-term trader, all these things, you will want a better margin of safety. Definitely 370, 380 could be a bit concerned because it has run up quite a bit. And the peak was 400. So if you're a long-term investor, you believe Alphabet in long-term, then definitely I will say, personally, okay, not financial advice, don't quote me, not financial advice. Remember, my investment channel, not investment channel, my finance channel is called Pigeon Investment. You don't take advice from a pigeon, okay, from a bird, Okay, my language is called bird language. Don't listen to someone who talks bird language, okay? So personally, if I'm a long-term investor, 380, 370, no problem. I will still buy it, okay? So now let's talk a little bit about options component here. So you see, if you are more of a shorter or mid-term trader, you are concerned that you don't want to buy too high of a price at like 370, 380, okay? You miss the 330 boot. So that's where options is so beautiful here. Option is just such a useful tool here. So imagine, let's say you want to get into Alphabet, okay, but it's a bit high. So you can actually do an option, sell an option cash cover put. Like what I'm doing now, I always do a cash cover put and covered cost to farm the premiums, which is the option view strategy. So imagine, let's say, okay, you sell a cash cover put for Alphabet at, let's say 350 example, okay. So you get a premium of maybe, I don't know, maybe just put at $300 or $400. Okay, 300, let's put 300. So if Alphabet continue to rise, well, that's fine. You know, you probably couldn't catch it, but you get to collect the premiums for free. That means technically I get the $300. So it's like a very tactical, strategic kind of move as an investor. So I mean, not everyone understands options, I get it. Some people find it risky. But personally, once you understand the concept of options, it's really one of the most powerful tools you can employ. So imagine, I'm interested in Alphabet, but I'm more of a short-term, mid-term person trader. I don't really want to commit to it. I can sell a cash cover put, 350 strike price. Yes, if Alphabet drops below 350, I'm happy I will take the stock because I want to buy at a cheaper price anyway. So I'm happy I accumulate Alphabet at 350 instead of 380. Plus, I get to keep the premium as well, maybe $300. Now, turn it the other way around. If Alphabet went up very quickly, very high, okay, maybe 400, 450. Yeah, I missed it, okay, I couldn't catch the boat. But at least I managed to earn that $300 premium. So it's still extra cash into your pocket. So the option is really one of the more strategic instrument and asset class you can use. In a lot of situations, be it you are like a farmer like me, okay, you farm the option view strategy, or you want to buy stock at a more of a discounted price, it also comes into play. Or you just want to give yourself some form of flexibility whereby you can choose to get assignment and then collect premium, which is maybe what you want, or maybe you don't really want assignment. It gives you the rolling option, okay, in case it falls too much. So there's a lot of flexibility when it comes to option selling. So this part, I mean, it's up to you, okay. If you like options, you can take a look. Okay, I do mostly option view strategy, which I will talk about it in the second part. So overall, my take on Alphabet is that I still feel that it has huge potential in the long run, okay. Like I said, Alphabet is my top holding, okay. I have a top 3 favorite company: Apple, Microsoft, and Alphabet. Alphabet is my largest holding of my entire portfolio. Since long ago, okay, if you watch all my shorts long ago, 1 year ago, all this thing, you will know that I'm a heavy advocate and believer of Alphabet. Because they have solid management, solid products, and they have a lot of tools. I mean, they have a lot of assets. They are not even monetized yet. Like example, Android. You know, Android is actually a free software for phones, right? It's not really monetized if you think closely. You know, they could like charge people for the software. You never know, you know. I'll give you an example. One day, Alphabet say, oh, companies who want to install Android as the operating software for their phone must pay $1. Do you think companies will pay the $1? Of course, it's just $1. But do you know how much billions will they get? There are billions of phone manufactured every damn year. Samsung, Xiaomi, even China phone use Android. Imagine the amount of income they can derive from charging Android software. And that's just one example. There are many other examples. Untouched assets that have not been monetized. So overall, that's my take. So to answer some of y'all who messaged me, okay, one shot is that, can you still buy Alphabet, yo pigeon bro? Yes, my personal take is yes. If you're a long-term investor, you see value, definitely. But I dive a bit deeper on the rationale behind and also some of the tactical strategy you can use, or strategy like cash cover puts, if you want to think about those options as well, to potentially get Alphabet at a cheaper price. Of course, short term we don't know, Alphabet can go up or go down. I cannot predict the future. Alphabet can crash at $50 tomorrow. I don't know, okay? But long term, I personally believe that Alphabet has huge potential. There's a lot of work not done yet, okay? There are tons of work not done, not completed. Tons of things they can do. And their AI Gemini is actually quite good right now, okay, on par. Some people even say better than ChatGPT. Okay, that's something to consider. And remember, even Apple, okay, Apple is using Gemini, okay, they plan to use Gemini to replace their Siri, something Siri, okay. In short, Apple AI is falling behind, and they are actually using Alphabet AI, okay. That explains a lot, okay. Okay, so that's all for my take on Alphabet. So that's my views, okay. So let's just look at any comments. Also, any questions or comments, feel free to highlight. I try my best to answer them, okay. By the way, if you were here in the previous stream, feel free to say hi, hello, okay. I know it's Wednesday, okay, Wednesday, but hang on tight, okay. We are on track to Sunday soon, okay, or maybe weekend soon. In fact, we are on track to Friday soon. Just like one more day actually, hang on for Thursday, then Friday, Saturday, Sunday, you all can relax and chill. Because I'm retired, in case you don't know, and I worked in corporate before. I know it's tough. Everyone hopes to make more money through stocks, investments, so they can don't work so hard at work, or at least take a break, that kind. So I do hope you all achieve that eventually. I hope everyone makes money here, really. I hope everyone makes money, and I hope my sharing helps you to think from different perspectives, and of course make money, and of course have a better life. And hopefully you also can retire if you wish to. Don't have to everyday go work, drag your feet, chain to the job, deal with annoying colleagues and annoying bosses. Okay, so hang on tight, my friends, hang on tight, okay. Friday coming soon, okay, so our journey with y'all. Then Friday, Saturday, Sunday, y'all can relax, okay. Okay, so any questions, anything, you're in previous stream, feel free to drop by, say hello. I'll try my best to answer your questions. Okay. I drink some water first. Drink some water first. Okay, so that's all my take on Alphabet. Okay, my views. So let's just move on to second component. Okay, second component is about options. Okay. Okay, so let's talk about options now. Okay, so I put my options on top. Okay, as usual. Okay, because some people feedback to me, the comment below block the options numbers. Okay, as always, I always tell people very openly, my first picture on top is all the options position I'm holding. So if you have any questions, can ask me. So today I want to talk about this concept called covered calls. Okay, so yesterday actually I talked about covered call already. Okay, I talked about part of the view strategy is using covered call. What is covered call? How do I set the strike price, deltas, and my thought process. So today I just want to add on a bit more, which is talking about rolling. Okay, I know previously I talked about cash cover put, the rolling. Okay, why it's so powerful and so important. For cash cover put, rolling is a key strategy, key component to be a good option wheel seller. Okay, personally, okay, my take is rolling is very important when you're selling cash cover puts. Okay, if you miss it, I won't repeat here. Okay, you can catch some of my previous VOD, okay, video on demand. So all my previous stream is always uploaded. Okay, I always put it on my YouTube. You all can catch it to understand what I mean by rolling, especially for cash cover and my thought process behind it. So today, covered calls. Okay, so quick recap. Covered call just means that you sell an option or contract based on the 100 shares you have. So example, I have Apple, 100 shares of Apple. I sell a covered call on it. So I'll get some premiums. Example, 200, 300, depending on the strike price I sell. So now people ask me, what about rolling for calls? How do we do the do you do that or whatever? So I answer your opinion very carefully. I mean, honestly, is that I never ever roll my covered calls. Okay, never ever. Why? Okay, so let me just explain a bit first. Okay, so quick recap is, okay, rolling for covered call means, okay, example, I have Apple 100 shares. Okay, I sell Apple covered call, strike price at 120, example 120. I bought it for $100, okay? So it's Apple share, 100 shares, okay, 100 times. I bought it for $100. I sell a covered call on it at 120 strike price, okay, 120, yeah? Now the Apple stock went up to $140, okay? Wow, strike went all the way up, okay? No choice, I have to agree to sell my Apple at $120 even though the share now is $140 because of this option contract. I've agreed. Okay, strike price 120, I have to fulfill it, so it gets caught away. So your 100 shares will be gone and you receive the $120 plus whatever premiums you are paid, example $200. So remember, this means that I actually earn from the premiums $200 plus I bought Apple at $100. Okay, my strike price is $120. So technically I also get capital gains, $20 per share. So $20 times 100 is $2,000. Okay, so that's what I receive. Okay, 2,000 plus the $200 premium. But of course the downside is I miss another $2,000, which is the 140. Okay, because between 120 to 140 is $20, right? Okay, so 20 times 100 is $100 extra profit I miss out because of the stock price capital appreciation. Now, what does rolling means? Okay, we don't talk about roll down or roll out. We just talk about roll up and out. Okay, the classic strategy is always roll up. Okay, so example, okay, give an example. Same example we use. I don't want my Apple share to get caught away. You know, I want to keep my Apple share. Okay, I want to keep my Apple share. So instead of getting it caught away at $120, I buy back the contract. So I have to pay money, you know, and quite a bit of money usually. So it's quite a substantial amount depending on the stock price. So I will pay money to buy back the contract so I can keep my Apple shares. Then I will quickly sell another covered call above 140. And that is what we mean by rolling up. Okay, rolling out just means a longer expiry date. Okay, we just talk about rolling up. So because I want to keep my 100 shares, I don't want my Apple to get caught away. So I buy back, pay quite a bit of money, okay, buy back, and then sell another covered call, maybe like 150 strike price, 160 strike price, above the 140 share price, okay? So when do you do this type of rolling up for covered call? It's when you are bullish, okay? You believe that Apple will continue to trend upwards, will go up even higher, maybe $500, okay? Let's say you think Apple will go up $500. That's why I want to quickly buy back. I want to close the contract. I want to keep my 100 shares, okay? Because I don't want the Apple to get, my shares to get caught away. So I give you an example, okay? Now, I buy back the shares already, okay? Apple is now at $140. I think Apple will go up to $500. I sell a covered call, another covered call on Apple at maybe $550. Okay, example only, example, $550. So I will still hold the share and then I will just sell another contract. So I have another maybe 30 or 45 days depending on the duration for Apple to climb up. Because I'm bullish, I think Apple will continue to go up. So that's why I roll upwards. So let's say good news, okay, Apple went up to $600. Woo! For some reason, 1 month later, Apple went up to $600. Yes, your strategy worked because you buy back Apple, right? Maybe you pay $2,000, okay, and Apple that time was $140. Now you sell a strike price at $500. So between maybe $140 to $500 is like $360 difference. So you actually earn that as well because of the capital appreciation you get from. So yeah, rolling up will work in that sense if you are bullish, okay? Now, why I never ever do that is because when you roll up, you are assuming the stock price will go up. But will it happen? That's a big question, okay? You really think Apple will go from $140 to $500? Do you think the probability is on your side? So you must think logically, okay? It sounds attractive in the example I use, but will it always occur? Most of the time, to be honest, no. That's why I never roll upwards. In fact, I never roll at all for my covered calls, okay? I give you my perspective, okay? So back to the earlier example. When I sell a covered call, okay, I bought Apple at 100, strike price I put 120. The moment I sell a covered call, I will get premiums already. So $200 example. I already lock in the premiums of $200. Next up, if Apple went from 100 to maybe 140, okay, like I said earlier, I already earned the difference between the strike price and the share price I bought. So $100, I bought it then strike price 120. I already earned the $20 in terms of the capital appreciation. So 20 times 100 is 2,000. So in total, I already locked in a profit of $2,200. Why would I want to take on more risk by buying back the contract, pay for that, and then potentially, potentially Apple don't go up and I could lose out on that. So that will affect my overall profit. So why do I want to take on more risk, okay, and reduce the probability of, making the money? I already locked in 2.2K profit. Why do I want to risk thinking that Apple could go out to $500 in 1 month? So once again, this part is about risk management and probability. Okay, if you like to roll upwards, go ahead. Okay, but personally, I never ever do. Okay, that's one of my core reasons. Because you see, when it comes to option view strategy, there's two components. The cash cover put component, which selling put options, and the other side is when you get assigned the share. Let's say after cash cover put you get assignment, then you sell covered costs. So take note that option view strategy has two components. Okay, the cash cover put side and always the covered cost side. So I let you know that for covered call, usually I let the share get caught away. I really don't mind because I already lock in the profit. I don't want to subject myself to more risk, okay, by trying to roll upwards. Okay, so I hope I managed to answer this part about rolling upwards, okay? And then another thing I want to talk about is I don't see a need to spend more money to go and chase after, potentially more profit. I don't do that. Instead, right, I let the share get caught away, and with the cash flow that just come in, I rather go and sell a cash cover put, okay? Because a cash cover put will give me premium and I can actually lower the strike price. So overall, it actually gives me a better margin of safety plus better probability. Okay, logically, let's say I get back, example, okay, Apple hit $140, okay? I have to get caught away, right? My shares get caught away, okay, $110. I receive the premiums, the profit, plus whatever capital I put on Apple, okay? Maybe 100 shares, right? Okay, so I get back the $10,000 as well. So with the capital and cash flow I get right now, I can afford to sell cash cover put on Apple. So example, I can choose to set a strike price of maybe 130, 120, or even 110. So Apple is now at 140. I want to be safe. I set a strike price of 140 for my next cash cover put. So you can see overall, for Apple 140 to drop to 110, not very likely, right? I mean, it can happen, but the probability is not that high. So once again, you have turned probability to your side, okay? Like I said, option view strategy is always about chasing probability, not profit. You want probability to be on your side, to be favorable, so you can constantly and consistently make money. Okay, so those are some of my thought processes behind why I don't roll covered calls. And like I said, get it caught away is okay for me. I rather go and sell a cash cover put because I want to farm the premiums non-stop. Okay, so any questions about this part can let me know. I understand some concept can be quite hard to grasp if you are not familiar with the option strategy. But feel free to check out my video, my longer video. I have 2 videos on it. By right, I should do a part 3, but I really couldn't find time to do a part 3. But the first 2 parts, which I did part 1 and part 2, covers all the fundamentals of option selling, the view strategy, the put and calls. So it is good if you watch that so you can really understand what this is all about. So here usually we talk a little bit more advanced stuff, share with you all more in-depth about my thought processes. Because most people, right, who watch my video actually a bit advanced already, okay, so they don't want to hear all the very basic stuff, but I do try to recap some of the fundamentals. So if you're new, highly recommend to watch that 2 videos I put out, the long video. Okay, I have other short videos, but the 2 long video really explain the concept of options in terms of cash cover put and covered cost. The option view strategy fundamental is all there. Okay, let me see. Yeah, so there are other things like, people talk about things like rolling down, rolling out with a further expiry. So all in all, I just want to be upfront with you. I never ever roll for covered costs. Yeah, so I won't talk about rolling down all these things because my take is the risk-reward ratio simply not there. Okay, like I said, you are betting, you know, on the probability that stock price can go higher. Okay, stock price can go higher. That's the probability you're betting. I mean, it can go either way, but I just think that it is not that favorable. Okay, Apple has already climbed from 100, 120 to 140. What are the odds of 140 becoming 180 or $500? Okay, whereas Apple has been charging upwards. Now you think about the downside. Would it be possible for Apple from 140 drop to 110? I think it is still possible, but less likely. That's my take. Okay. So I hope I managed to give you my perspective on this covered calls yesterday plus today. Okay, like I said, you miss out on the covered call strike price, what price to set, why set on this delta, how to manage. You can watch my yesterday the stream. Okay, and today I covered more on the rolling aspect. So covered call got many other components. Okay, but these two are the main key parts that I really want to highlight because they really matters if you want to be able to trade the option view strategy effectively. Okay, so any questions, feel free to let me know. I try my best to answer them. Like I say, sometimes for some reason your comment don't appear in my phone or the screen in front. You just feel free to highlight. Okay, like someone, the fatty B9M, sometimes I know you comment, but it doesn't appear here for some reason. Okay, so let's see if there's any questions. Let me know. I try my best to answer them. Okay. Hey, Ya71, nice to see you again. Nice to see you. Hello, Ya71. Hey, Ya71, really happy to see you. Hope your day was good. So I assume you just ended work. Wow, I saw your last comment. So I was saying, yeah, you have some Palantir, right? Wow, you must be very happy now. So just to recap, by the way, Palantir was up like what, 29 or 30% yesterday. I think they probably announced some excellent result. I'm not an investor of Palantir, though I studied it before in the past, so I can't comment much on it. Okay, but I think Palantir has been winning a lot of government contracts. You know, they do a lot of data advice on all those like government services. I think police, firefighting, all these kind of things, plus many things. Okay, so I'm not an expert in Palantir, so but if you help Palantir, congratulations. I think you'll make money hand fist all over. Okay, so probably Yaf had a great party last night, laughing to the bank. Okay, so happy to see you. Yeah, very happy to see you. Okay, hope you are doing well. And yeah, so for those who own Palantir, really congratulations. Okay, I don't own Palantir, so unfortunately, okay, if I own Palantir, of course I'll be very happy. Hey, you, nice to see you. M232, nice to see you. Good to see you. Thanks for dropping by. Okay, like I said, any questions about option view strategy or my stream, feel free to highlight. Okay, I try my best to answer them. Okay, next up. Okay, market open already. Market open. So as usual, once it hit about 9:30 my local time. Okay, I know market is probably at 8:30, 9 o'clock in US. So market has opened as usual. Let's go in and identify, and then let's see if got any potential trades or not. So it's always part of the stream. Okay, we will always go to the market, discuss any potential opportunities, and if I make any move, I will let you all know. Okay, like some of the options I sold, I closed. I always update you all on the stream. So if you watch my previous stream, I always let you all know my thought processes on why I choose to close the position or open new position. Okay, let's see the market. Okay. Oh, my computer a bit laggy, so pardon me. Sorry. Probably have to update my computer again. Oh, my SpaceX dropped 10%. SpaceX down 10%. Oh. Honestly, a lot of people actually ask me for my views on SpaceX. I just quickly highlight is that, okay, I mean SpaceX, I like SpaceX because of the XAI component and the satellite business, but honestly they are loss making. Okay, SpaceX is loss making. SpaceX has three components: the satellite internet business making a lot of money. Okay, global internet, that one I agree is great, but the XAI, the AI component of SpaceX, last time it also include X, last time called Twitter. Okay, not doing well. Rocket launching business also not doing well. Okay, so that's why personally I won't touch SpaceX for now. But if SpaceX ever come down a bit more to like 50.75, I'll definitely take a look. Okay, so I also looking to buy Apple 308. So I give you my honest view on Apple right now, okay, honestly. Actually, yesterday about 305, very tempted to buy, very tempted, okay. Because Apple, I remember the peak was like 330, 340, then they announced weaker forward guidance. No weaker result, earnings result were good, but the forward guidance were weak because of chip constraint, memory chips constraint. So the revenue guided for this quarter, which will be reported next quarter, it's not very ideal, okay, not below analyst expectation. So Apple is dipping a lot. So that's why 340 dropped to 300 or 310. Okay, so honestly, if Apple dips to about 280, 290, or even 300, I will buy immediately. Okay, I let y'all know my take right now. Okay, once I bought it, I will do screenshot share with y'all. Okay, in fact, when it was 305, okay, yesterday, I'm very tempted to buy because I'm very worried Apple will climb back out quickly to like 310, 320, like Alphabet, you know. You know, Alphabet sunk to 330, now it's what? 370, 380. Can't even chase back already. So I'm also very afraid Apple will quickly recover the 330, then I will miss the opportunity. Okay, so I will monitor first, so maybe, because I usually will trade until market close, local time 4 a.m. So if Apple, tell you upfront first, Apple drop the 300, I will immediately buy. Okay, I'll build some position in it. If it continue to persist at 303, 305, then I will think about it. But likely I may buy some. Okay, so that's my take on Apple. Okay, just to share with you. Okay, so wow, Microsoft now is 490. Oh my god, you know, it almost dipped to like, I think Microsoft low was like 360. Can't remember. Microsoft low was 350, 360, yeah. So back then, you know, I was buying aggressively. Now, going back to all-time high soon. So if you miss the boat, all the best. But like I said, I still believe in Microsoft long run, and the management guided positive cash flow for 2027. So I still feel, personally, okay, personally, okay, not financial advice, I will still buy if I want to. Okay, so for now it's mainly Apple that I'm looking at, and then let's see any potential for cash cover puts on. Let's see. You all can see my screen, or let me see. Wait, let me double check. Okay, the screen is moving. Okay, so you see my second screen, the number bling 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 bling. That's the part I'm talking about, the stock. We are looking for opportunities now. Okay, Nvidia now 220. Oh my god, haven't announced result, right? Nvidia, okay, I can't remember, but I think, has Nvidia announced result or not? Let me see. I remember August is Nvidia result, but it's in 20th, right? Let me see. I remember, oh yeah, not yet. So Nvidia will be announcing result 26th of August. So wow, Nvidia is already 220. Wow, that means my Nvidia is making money. Let me see. Okay, let me see. Okay, so let's look at my options. I want to see if any potential to close some of the options or not. Okay, because I did say I want to build Nvidia position aggressively, so I can tell you that I have a lot of puts and calls on it. Okay, Nvidia. Okay, you can see row number 10, 11, 12, 13, 14. Okay, I repeat, 10, 11, 12, 13, 14 is my Nvidia put position. Okay, I adjust for you. Okay, so let me see. Wow, my computer really a bit slow. Sorry, pardon me. Very laggy. Wow, cannot take it. Okay, so 10, 11, 12, 13, 14, yeah, is my Nvidia row. Okay, so it's actually profitable now. It's about 39%. Highest is 39%. So my profit target is always 50%. So I'm not closing Nvidia yet. So you can see my Nvidia strike price is well staggered. 155, 130, 120, and the dates are always different. So I said before, avoid selling all your cash cover put in the same contract period, like 1 month, 2 months, all on the same period. When the day comes, if it doesn't go against it doesn't go with your favor, okay, it goes against you, you are in trouble. Okay, you take all the assignment, or you have to roll all over, which means you close at a huge loss, and you sell at a longer expiry. Hopefully you can recoup. which you may not, which you may not. So when you stagger the risk, it's better managed. So even if let's say Nvidia crashed to 155, okay, I have to take assignment for one of my contract, number 10, okay, I highlighted. But the other contracts are like 130120. I'm still safe for the rest of the contract. If it doesn't fall below 130120, they will expire worthless and I keep the money. So you can see for number 10, the put, okay, contract strike price is 155. I already collected $12.39 for per share. So that's about 1,200. Okay, so it's not bad, right? Not bad. Okay, and if I close at 50% profit, I still can keep $600. So you see, that's the benefit of option wheel strategy. If you like to sell this type of options, you can keep farming consistent income. Okay, that's the whole idea. So I can tell you upfront is that now it's about 40% profit for Nvidia put. I'm not closing it. I'll leave it there first. So maybe 50% there I will close it. Okay, so let me see what other opportunity I have to close. I share with you. Okay, so Apple. If you look at the first row, okay, I talked about it yesterday. Just a quick recap is that my Apple now is at 42% profit. Okay, 42%. But once again, I need another 8% to close. By the way, this contract, number one, the first one you'll see Apple. The first picture is the one we bought on the stream. Okay, we shared and talked about it. And I give you all my thought processes, explain behind why I choose to do that. So good lah. I mean, we get to do it together. So I can show you all why I choose to sell this particular Apple put at a certain price, and then we can discuss whether this strategy work or not. So it kind of work now, right? It's working now. Now we are up 42%. So once it's hit 50%, then I close. Then we get to collect the premiums. So hopefully through this sharing, the live sharing, I can answer your questions on options better, and also actually demo to you also. Okay, the steps and the processes, why I choose to sell at certain prices. Okay. Don't have to follow me. Do not follow me instead. Okay, remember, options are actually high risk instruments. But if you are good in it, you know how to manage, it's actually quite profitable, especially when it comes to selling options and the wheel strategy. But once again, I want to remind you all, option wheel strategy is a slow and boring strategy. Okay, very slow and boring. There's only a few people who can really grasp the concept and have the patience to learn and actually keep using it. Because most people, like I said, it's not that they don't understand the wheel strategy. They understand, okay, but they fail. Not because the wheel failed them, but because they failed to manage risk properly. They were too greedy, or they have no patience. Some people just want to 10x their money quickly, 5x their money quickly. They have no patience to do this option wheel strategy. Wow, wait for 1 month, the contract 1 year, 2 years, then maybe close this week, that week. They don't have the patience to be. They can't be bothered like, wow, sell 1 month contract so long. I don't want. I want to sell like 1 day DT, 0 DT, that kind. All in that kind. They want to 10x, 20x their money. Win fast, win big, or go home, that kind. So option wheel strategy, like I said, is not that difficult to understand, okay? And if used carefully and correctly, it can be profitable. But like I said, not many people will use it because it's slow, it's boring, it takes time to learn, and it takes quite some time for me to build up a big position, to stagger option throughout the whole year. Now every few weeks or every month, right, I will have options expiry, and every week, almost every week, I will close some position and potentially open some. Okay, all will be shared here on live stream, so you all can see how it goes. So for those who are using or learning this option wheel strategy, I hope that it will be profitable for you. Okay, I hope you can grasp the essence and that it will become profitable for you in the long term. Okay, so now let's continue to just quickly see any other opportunity. Okay, it's 9:50 already. Sorry, I was late about 9 minutes for the stream, okay? Because my microphone got some problem. Okay, so SpaceX, okay, so you can see now, okay, I share with you, so my take is, I want to build position in Apple. Okay, I will buy shares actually, okay? If Apple has a significant dip, I will buy share plus do options. Okay, if I sell any cash cover put, I'll update you all again, okay? So I want to give you a quick example on SpaceX. Let's take a look, okay? SpaceX, let's go. Okay. Okay, you all can see my second screen, hopefully. Okay, second screen. Okay, let me reposition it a bit to make it. I think you all can see, Sorry, I mean, I know just now I talked about the live process, okay? Yeah, all the trades are live to share with you, but I know some of you want to see what button to press, all these things. I'm still trying to figure out because every time I right click, left click, it doesn't appear in the stream. So let me figure that out, then we can walk through the entire process of the buttons I click, the number I press, how to check confirmation, and the fees I pay, all these things. Okay, so let's just quickly look at SpaceX. Okay, so you can see SpaceX, the premium is very juicy. Okay, you see, let's look at the strike price of 0.3 delta. Okay, let's just look at 0.3 delta here, 0.282. Okay, $100 strike price. Okay, you can see, you can see for just a capital of $100 or $10,000, right, you can earn about $700 premiums. And you look at the IV, 84%. That is damn high, okay? This IV is higher than NVIDIA by 2 times. Okay, NVIDIA is a high-risk stock. So the IV called implied volatility, okay? This one SpaceX is 2 times of NVIDIA, okay? NVIDIA is already a high-risk stock. SpaceX is even higher, okay? So I tell you, the mistake people make here is they are very greedy. They want high IV, high premiums, right? So they will do this. They will go and sell SpaceX stock. They'll sell options on it. So strike price $100, you know. So this is what I call greed, okay? People want to chase high premium, so they look for this type of stocks with high premium. But the company usually has poor fundamentals, and often, okay, these are companies they don't want to own. They just want to get the premiums. So it's called greed. So imagine SpaceX so volatile, weak fundamentals, it can easily crash to $70, $80 and never recover. Then you'll be stuck with the stock. Okay, you can no longer sell puts on it because the premium is too low, stock price dropped too much. So remember, one of the key mistakes people make in the option view strategy is they go and greedy, they chase after high premium. Okay, so example SpaceX, so gone case. So remember rule number 1, okay, whether you talk about option view strategy or just selling options to farm premiums, never ever sell stocks on companies you don't want to own, especially companies with weak fundamentals, okay? Stock price goes down, never go up, gone case. You suffer huge losses like Neo or GameStop, okay? So just a reminder, very important, okay? So I won't touch SpaceX for now. I will only do it when SpaceX really drop more significantly, okay? So that's all, okay, for my options component second part and the market identifying opportunities part. So I share with you all my takes, okay? And then you all can see how it goes. By the way, if you have any comments about the current market or your views, your strategy, please feel free to share with me, okay? Highlight in the comments. I also want to learn from you. Okay, okay, Singapore, okay, I'm Singaporean. But I also quite like Malaysia, okay, because Malaysia, I think, generally, okay, just a sidetrack a bit. Okay, I do have plans and thoughts to relocate to Malaysia, okay, because I think Malaysia, the cost of living is lower. It seems more seems less stressful than Singapore, I feel. And I think, okay, a personal opinion is that I think Malaysians, some of them, right, the culture, they're usually more friendly as compared to Singapore. Because I know Singapore is usually more hectic, everyone rushing, so they are not friendly. I can't blame them. But I think Malaysia seems a bit more friendly, the people. Of course, safety-wise, I think it's not as good as Singapore. So I'm seriously thinking about relocating to Malaysia because right now, right, my main income is option trading. Okay, you know, I'm not really bound to location, so I can actually go to another country to have a better quality of life at a lower cost. You know, next time I'll talk a bit about Singapore. Wow, recently I went to do grocery shopping. Wow, Singapore damn expensive. Okay, the Twinings, the tea bag, right? Last time used to cost me what, 12 Sing dollar, which is like what, 10 USD. Now it's 15 Sing dollar. You know, in just like 1 year, you know, it's up like $3. from $12 become $15, and that is at a discount. Okay, no discount, $17 Sing dollar. That's ridiculous. 1 year up $3, you know, and that is at a neighborhood shop like NTUC, you know. I didn't go to like some premium cold storage to buy, you know. I go to NTUC neighborhood shopping center. The inflation is crazy, man. So I'll talk about this next part. So this chit chat session maybe next time, okay, next time. Okay, yeah. So you just answer Singaporean here. Okay, hope you are doing well. Yav 71. Okay, small position only. Key is whole market turn super green. Yeah, so recently, right, I think market has been trending upwards. So I think I just did a short video earlier because I also do a IWDA every month. I will buy into IWDA ETF. I think you probably know what is IWDA. So that one is actually because some viewers actually messaged me. In fact, my friends also asked me, hey, how do I start buying ETF, IWDA? So I created that video to journey with them, to show them that you may not know all these sophisticated instruments, you know, options, wheel trading. Doesn't matter. The fact that you just buy ETF, a good quality ETF, you can also do very well in the long run. Okay, so that's why I did the IWDA ETF series. And just now I also come to this conclusion that market has been recovering quite well, especially the tech sector. And remember, okay, just recap a bit, okay. I mean, if you watch my short, sorry, I just repeat a bit, okay. I think market will continue to trend upwards, at least in the mid-term, you know, or even long-term. Because remember, Donald Trump said that he believed Dow Jones Index can hit 100,000 points. I think now it's like 50 or 60,000 points, I can't remember. In short, he believed during his presidential term, I think he still got 2 more years, right, or 3 more years, he believed DJI can double, okay? So remember, he is the president, and we all know Donald Trump has significant influence on the stock market. So it is likely he will do whatever it takes to keep pushing the market. And when he exits his presidency, he wants to look good, right? He wants to show people that, see, I became the president, I make America great again. I make the stock market double. So personally, my take, I think the US market still has huge potential. Okay, remember the Dow Jones Index is only what? 55,000 or 60,000 now. Imagine if it hits 100,000 points. That means the stock market literally doubled in the next 3 years. Okay, so that's why he say, okay, whether it happens or not, we don't know. But the potential is there. Remember, Donald Trump is a businessman. He is the president of US. He has been doing a lot of things to keep funneling money and channel into the US market. Plus, sidetrack a bit, okay, trillions of dollars now are pouring into the AI tech sector, not just from the US, but globally. Okay, you look at Japan, South Korea, even Singapore, you know, even Malaysia, all the countries in the world are pouring trillions of dollars into the AI tech sector. Okay, this is a huge topic that I want to talk to you all about. But another stream, okay, now it's already 10 o'clock, so we keep it for another time. There's a lot of key information and thought processor I want to share with you on this component, okay? So people who still think that AI is bubble, tech will be behind, I hate to say it, but you really want to reconsider, you know? When trillions of dollars are poured in, you have to think about it. And when government and a lot of countries are pouring trillions of dollars into the AI tech space, right, it tells you something and also some perspective that we need to consider. So then we talk about it, okay, I don't sidetrack so much, okay. So yes, Yaf, I agree with you. Market turns super green, and I think market will continue to, you know, likely trend upwards, at least in the midterm. Apple launching iPhone, price might be higher, dude. Yeah, correct. So yeah, I mean, one of the issue Apple is facing now is because of increasing memory chip costs, and they are planning to raise actually iPhone prices. Personally, right, I think they likely will do it. And I think, okay, my own view is that, okay, I know I said it in my shorts, don't mind, I just recap, is that people who buy iPhone products are rich people, okay? Even if they are not rich, there are people who can afford it, okay? They have decent income, decent standard of living, and they have disposable income. Honestly, if you are poor, what would you buy? Probably buy Xiaomi phone, right? Like me, last time I was poor, I admit it. I bought a $100 Redmi phone. Note 6, Note 2 or Note 3 or whatever. I wouldn't buy Apple iPhone because it was back then it was 1,000 plus. You know, Apple iPhone has been increasing price almost every year. Last time iPhone was what, few $100s, right? Now it's like what, $2,000 and people still buy. And the queue is donkey long. You have to queue up to buy the phone nowadays, And sometimes you queue online, it can be out of stock. Even buying online, iPhone is out of stock. Can you believe it? So personally, if iPhone continue to raise prices, okay, let's say Apple raise price to plus another 50 or plus another 100 to their iPhone, or even all their products, they raise product across $50 to $100, they raise products on all their iPhone, MacBook, or whatever you call it, people will still buy. That's my take. Okay, that's my personal take. So overall, I don't think their revenue will be hurt too much because they can simply raise price. So Apple has one unique power called pricing power. Like Coca-Cola, tomorrow Coca-Cola raise prices by 10%, okay, 10 cents, 20 cents. Do you think people will still buy Coca-Cola? Of course, it's just 10 cents, 20 cents. People don't mind. Apple, they choose to raise prices by $50 or $100. Do you think people will mind? No, because people who buy Apple products are rich. Okay, they have money, disposable income. They can afford. Most people like to bring their Apple MacBook to where? Starbucks, coffee, branded coffee place to show off, right? See, I'm using a MacBook. You're using what? Lenovo. That kind of stuff, right? I need to show you all that. Oh, I'm using MacBook. See, they can afford this $6 to $8 coffee at all these high-end restaurants. No problem. So that's why they have this power called pricing power. And like I said, people who are using Apple products are also trapped in the ecosystem. Okay, even you are not very wealthy, you have decent average income. You are so used, deeply rooted in the Apple ecosystem. It's very hard to transfer to another system really. Be it the familiarity, the software, the data. Transfer so difficult. Every now and then got issues. So in short, my take is because of the sticky ecosystem Apple has, plus the pricing power and their customer, all these things, they are so used to paying, and they don't mind paying because they can afford it. All these combination factors, right, makes me feel that Apple will remain resilient, and it is unlikely, Apple will suffer a huge revenue sharp drop. Okay, so that's my take. That's my take. Okay. Okay, just to answer a few more questions. So we see how we may not be able to do a quick final part, but we see how, because it's already 10:07. I try my best to answer your question first. Hi Pigeon, market all-time high. Yeah, man. Hey, good to see you again, Flaming Snow. Good to see you again. I remember you, okay? Good to see you. That's it, So for those who are vested in the market, congratulations. We are making money hand over fist, okay? And I'm sure a lot of you are doing very well as well. So like I said, even if you don't know how to stock pick, you cannot get like 12 to 15% return a year with options or stock picking. It's okay, just buy the market. Look at me, I buy IWD ETF, I show you all, and even SPY 500. I also can do well. An average person out there, okay, don't know about market, do Grab delivery, Uber, DoorDash, that kind, they only earn like $2,000 to $3,000 a month, But they every month put $1,000 in the stock market, they can also do well. Okay, look at it now, market all-time high. Now SPY what? 750 is it? Or 760? And all the tech stocks, they drop so much, all recovering right now. Except China stocks, okay, so sorry. Those who buy China stock, and also me. I also hope Alibaba, I know Alibaba has been climbing back up, okay. Alibaba, I think now is like 120, right? Okay, I do hope Alibaba can go back to 16170. Still need to be careful, expect a dip before all-time high spilling to 2027. Okay, Yaf, are you referring to potentially the downtime, the summer winter season? I know during, I think you shared, right, or someone shared that during the period that between like September to November or August, this period, there's a bit of downtime for markets, because I think people have spent too much money and they're saving money for Christmas. So the consumer spending will be lower. Some statistics, I think someone shared that. So I think that could be a concern. But personally, my take is that market, okay, at least in the midterm, okay, likely will still trend upwards. And remember, like I said, Donald Trump, he said that DJI can double, Dow Jones Index can double. So market still has a lot of room to run. Okay, whether we like Donald Trump, like it or hate it, okay, whether we hate his tariff policy or whatever thing, right? He's a businessman. He has huge influence on the market. We are here to make money, okay? We are here to share strategy. So I think market still has a lot of room to grow up. And remember, all-time high can break all-time high, can break all-time high non-stop. Market a few years ago was only 550, and it went bull run all the way to 750, okay? And now with the Iran war, all this thing is still running up, you know. So imagine one day, okay, the Iran war stopped. There's a peace deal suddenly, peace deal that happened. Wow, market from 750 go to 850. Straits of Hormuz become Straits of Happiness. Everyone free to move around. Everyone happy, all cooperative, war stop. Market will balloon up another few, probably 10, 20, 50% also possible. Okay, so that's all for my sharing. Hey, thanks for dropping by and giving the comments. Very happy to have a chit chat with you. So there's actually a last component I want to talk a bit about China stock, but because it's already 10:10, so we will stop here first. Okay, I basically want to share with you all my strategy, not say my strategy, more like my moving forward plan with all the China stock I'm stuck with. Okay, I'm down about 50k, but now probably I'm down about 30, 40k instead because Alibaba has recovered quite a bit from I think 90 to 120. Hopefully it can go back up to 160, 180 so I can maybe cut my losses and it won't be so painful. Okay, I just want to share with you in depth my take on China stocks and also get some feedback from you also. Hear from your views on China stocks and whether my strategy, what do you think of it. But we will keep it for next stream, okay, next couple, because I want to keep my stream to just 1 hour, okay? So we will stop here. So just want to say thank you so much everyone for dropping by. So hopefully we managed to cover Alphabet today, why I choose to buy Alphabet and my thought process behind it and how option is such a good strategy when you want to buy a particular stock. And then secondly, we also cover about the covered cost, why I don't roll, what is rolling, and hopefully that was helpful to you all. And like I said, any questions feel free to highlight. If I miss it, just repeat, okay? Because I may not be able to capture all the comments. So like I said, like see some of your comments here, not in my screen, and vice versa. Okay, Ken. So let me see. Okay. So just want to say, hey, thank you so much, everyone, for dropping by. Good to see you again, Flaming Snow. Okay, so we will keep the stream short, so we will end it here. It's about an hour. So thank you very much everyone who has dropped by. So if I have any new plans, updates to my portfolio, I will also share with you all. I plan to do a full portfolio update soon also, and then I'll discuss with you all what's my take on it. And then thanks for dropping by, okay? So I won't hold you all back. I see you all tomorrow again. Okay, so tomorrow is same thing, 9 p.m. Time zone is GMT+8. I stream Monday to Thursday. So tomorrow is Thursday and then it will be weekend already. Okay, Friday, Saturday, Sunday. So every one of you all can relax and have a good weekend. Okay, thank you so much for dropping by. I'll see you all tomorrow 9 p.m. again. Okay, goodbye. Thanks for dropping by. Thank you so much.